All right, welcome everyone to Jeff Mackey Live. I'm Spencer Israel. The other guy is Jeff Mackey, and we're live. Funny how that works. Jeff, how's it going?
It's going pretty well, Spencer. We're making our way through earnings season. It's the spring slog. It's a little slushy in New York. It's a little slushy in earnings season. That's your tie-in.
Tell me
That's how it
about
feels.
that. Tell me about that because we're in the retail earnings season now. We had Walmart last week. We're going to get a few more earnings reports this week and next week, and then what is special in a good or not so good way about this time of year for the retailers?
This time of year, if you remember last year, the great bloodletting of 25, we reported just like we are again this year, a pretty solid fourth quarter. 24 was a nice Christmas. It was the biggest holiday ever until this year, which was now the biggest holiday ever, and it's kind of an annual event. They're reporting fourth quarter numbers. Now, nothing seems quite as long ago as Christmas at this point. I think we can all agree that was I'm already buying for next Christmas. I'm arguing with the wife if we can put up the lights yet. We got the Supreme Court overturning the tariffs. That's supposed to be good news. All this stuff is just uncertainty, is my point, Spencer. It's not telling me much to let me know. For instance, TJ Maxx reported a great quarter. TJX, they were great. But it just introduces more uncertainty. The Supreme Court outlawing tariffs, whatever they're going to do, we knew what the president was going to do in response to that. He's not a man that enjoys people telling him no, and so he's going to find a way to go about kind of inflicting those tariffs in other ways. That introduces uncertainty. You tap that off with any management team kind of worth its salt, and most of the big boys in Consumerville are worth their salt. That's how they get to the corner office. They're going to be cautious this time of year because you can't make your whole year in the first quarter in Consumerville, but you can kind of blow it. And so we're seeing a lot of quarters that are beat and be a little cautious. The companies have a reason to do that. This is a time you build the portfolio. It's not a time that you really make your profits for the year.
Okay, so let's talk about the tariff thing. I thought we were out of the woods. I guess we're not. So just to recap, Friday, Supreme Court says tariffs were illegal. Trump responds and says, okay, I'm going to do them anyway. I'm going to do, what did he say? He said 15%, and then he said 50.
He said
right?
10%, then 15%, just because probably in response to an Olympic event, who knows? He's going to figure out a way to kind of exact his tariff. But people have been trying to buy this news. They're unconstitutional. The Supreme Court's going to outlaw the tariffs. Not true. We've come a long way since last year. If you remember the great kind of Liberation Day lows, I've drawn the uptrend. Harold down there is at 44. Right now we're up towards 60, and we've come a long way since last year's just absolute merciless bloodletting into that downdraft. All started from the announcement that there were going to be tariffs. Then he held up that placard, as you recall, and it was like, I'm inflicting tariffs on everybody. That turned out not to be the case. The companies navigated that okay, but the best trade of the year comes in that maximum uncertainty period, and that's sort of what we're entering on the consumer side. So I'm just looking for kind of blocking and tackling throughout this earnings season, even though we got some big names coming up next week.
Yeah, but as you pointed out, we're now almost a year. We're 10 months into, 10 months since Liberation Day. So that's 10 months that we've had to get used to the idea of tariffs across the board. Um, are the stocks reacting at all to this? It doesn't seem like
it was a little bit of sell the news. No one thinks that they're going away forever, and the problem is uncertainty itself is kind of what stocks fear the most. It's a cliche for a reason that stocks hate uncertainty. Of course, they also climb a wall of worry. So go figure. You have a cliche for almost any outcome in the market. But the bottom line is, even whatever you think of the tariffs, if a crappy plan that you can actually make a plan around and say, okay, this is an unfortunate thing, but we're going to build our company to kind of understand this market as is. That's better than no plan at all. And so we're back to having no plan at all. That just makes it a little hard to plan your year if you're trying to actually buy products abroad and bring them in to sell them in the United States. It's a good reason to chill for a little bit.
Chill if you're a retailer, chill if you're looking
as an investor, it's time to build your portfolio. If you're long them, this is not enough reason to panic. Even like say Amazon or Walmart reported entirely different quarters. Walmart, is much more expensive at this point because they have more certainty in what they're doing, and they're going to spend $30 billion on capex. Amazon's spending almost 8-9 times as much. They're spending $200 billion. The market had a conniption fit And that's kind of come back a little ways. Walmart, it was again a perfect earnings report that kind of popped and dropped right away. It's just it's people are kind of shuffling their positions a little bit, and so that figures. There's a premium uncertainty right now, but not that much of one. It's just there's a lot of headwinds out there. Not a gale, not like last year where we just again the crushing sell off. That is a much better market in terms of trading. This is just a better market for kind of chilling a little bit. If you don't like it, relax. TJX reported beautifully this morning. It's down 1% as we're talking. Like, that's a great looking chart. I want to be long that stock all day, 5 times on Sunday. Bring it down as low as you want. It's lower because the outlook wasn't as good, but it's just take it for exactly what it's worth. It's a company that beat the expectations that they just set, and they're setting lower expectations for the next quarter. They've done that about 8 quarters in a row. They keep doing it over and over again. If they were doing it the other way around, the stock would be about $5. But they're going to beat the estimates that they just put forth. They had 5% comps. The consumer seems fine. They're responding well to what TJX does. This is what I said before. It's a time to build positions. If you haven't been long TJX, a down 1% day in response to great news is a perfect time to kind of nibble.
So TJX isn't preaching caution because of tariffs. You're saying this is just what they do.
They preach in caution because that's what they do. They would make up a reason. They're not necessarily, they're kind of insulated from tariffs a little bit, but not really. None of these merchants are entirely. It's just what they do. So they came up with 5% comps after telling us that they would be up 3%. So better than expectations and cautious in the out years. We saw Home Depot and Lowe's say almost verbatim the same thing, which was crazy. They both use the word frozen to describe the housing market. The only real interesting thing there is that Lowe's has been on an absolute heater with the idea that the kind of the DIY crowd, the people that like to do it themselves, little projects, and the consumer themselves, were going to be a lot better. Home Depot's dead flat for the last year because the housing market's been frozen since COVID. Doesn't seem to be thawing anytime soon. Both these companies, again, they beat and they guided lower. They're going to figure out a way to grind out their earnings, but that doesn't make it an exciting time to buy the stocks.
Right. There's a lot of things going on here. So the takeaway as far as the tariffs are concerned is that the world's not coming to an end like maybe it was last April, right? And the market was pricing in for that to happen. And then, of course, everything rallied off those lows. So that's not going to happen. We're not going to get a Liberation Day type of crash. We might not get much upside in the near term here either. So you're thinking more of just sideways chop fest. I
think it's a little bit of a chop fest, and you want to hear. There are some select stories out there that I'm particularly interested in. We've talked about Target in the past. They report next week. There's a lot of news to pay attention to. This could be a great kind of outcome for them. They're going to take estimates much lower than they are because this is a rebuilding year. If this was a basketball team, you'd be playing for draft picks at this point. They're going to come in and they're going to say, listen, we're tanking kind of this year. We're going to spend a lot of money. And if they start doing some things right, we'll hear about it later this year. But right now it's just, they're going to give us a plan. And that plan is going to include spending, not earning much this year, and hopefully doing some things better going on. Either way, if you've been kind of skeptical on the stock in the past, well, you could have just bought it at 85. It's down from 2 opportunity. If you don't have a position, pick away. But this isn't going to be the quarter that is the most tremendous upside that you've ever seen.
Well, I was going to say it's already had an amazing 6 months, so you're kind of chasing a little bit if you're buying Target now. I know you bought Target a few months ago. Good on you, and that was your trade of the year that you kind of finished off in like the first 2 weeks of the year. So nice job on that.
Yeah, that worked out pretty well.
Yeah. But
there's more meat on the bone. I mean, if they're actually going to fundamentally improve this company, they're going to do it over the next 6 months. They're not going to do it tomorrow on the conference call. Tomorrow on the conference call is going to be all about getting to know the new CEO, what this Fidelity guy is all about, and hear what the company has in store for Wall Street. They have to set expectations. Brand new manager. He's got to get to know the analysts, and they got to get to know him.
You don't think maybe that this recent run for Target is just the market pricing in the very thing you're talking about?
It's trading at 15 times earnings. I think that they're starting to. It's he came in and he's been really good so far. He's made changes, as I talked about with you in the past. I wanted him to come in and announce his presence with authority.
Yeah.
The Godfather analogy was he has to kill the other heads of the five families. He's done that. Target needs changes, is what I'm saying, and so he's making it clear that there are going to be changes there. This trades at 1/4 the valuation on a price earnings basis of Walmart. So, Target doesn't have to be perfect. They just have to start getting better. And I think that's what it's pricing in, is they can't do much worse. Victoria's Secrets, on the other hand, has been on a terrific tear, consolidating a little bit. They also report next week. I think they're going to have huge numbers. I'm not sure if they can break out, but that's a price in. That chart goes from 20 to 67, 60. It's they're pricing in a lot of performance there, and I think they're going to get it.
So the overarching takeaway here is in terms of the earnings reports and the company commentary, everyone's going to more or less say the same thing, which is, well, at least if they're operating well, it was a great quarter. If they're not operating well, I guess it wasn't so great. But last quarter was good. But for this quarter and for this year, we want to slow play it, right?
Here's the 1-2 step. Step one is you take down expectations. You want to sound competent and reasonable, and that you have a plan, and you want people to expect the best. Step two is 3 months from now, you beat the crap out of the estimates, and then you kind of guide cautiously again. Don't expect us to be this good every night, and it's like a hockey coach or a basketball coach. You don't want kind of the team to get cocky. You don't want anyone to be out there kind of over speculating what kind of excitement they have in store. But, you just want to seem rational. You want to seem like you have a plan for the year. The confidence that we see out there, the consumer reports, there's plenty of reasons for any type of merchant to issue cautious guidance. And there's not a lot of reward if you come out and say, we're going to be huge at Christmas. Then you spend 9 months kind of building to that. They want to set the bar nice and low in the spring, and then have a better than expected Easter, back to school, Christmas.
But then where do the tariffs thing fit into all that? Should we even care?
They handle these companies. The reason they're not getting kind of just blasted into the oblivion the way we saw early on Monday with the confluence of that big scary article about how AI was going to kill us all. And the tariff action is that most of these companies, the ones that are at least they're performing, handled those tariffs better than expected. It didn't tick straight through to inflation, didn't absolutely poleaxe them on margins. This just becomes noise. We'd love to have it behind us. It's not, I don't think anyone's going to look back on last year and say, this was great, but these companies have done a lot of the heavy lifting on their supply chain. The problem is coming up with a predictable earnings model, which is how Wall Street really dances. They want to have a nice spreadsheet that turns out nice and clean and kicks out predictable numbers. That's a little hard to do when, it's you take everything that we just spent a year building in terms of what's going on with tariffs, you chuck it out the door. The EU starts backing off trade agreements. No one wants to sign on the dotted line. That's just a pain in the butt. Pardon me, I almost swore there. That would have been naughty. But it's a pain in the tuchus for these retailers, but most of them are going to be able to handle it. It just because they spent the last year trying to figure out how to get things from places other than China, for instance. If you recall, when we had at one point 200% tariffs on China, that would have been bad. So it's better than last year, but it's not a time that you want to bet the house.
So it's fair to say that the more tariff headlines we get, the less likely they are to negatively impact stocks the way they did the first time around, but still they can more or less act as headwinds or ceilings, right? And just create a general air of uncertainty.
An air of uncertainty. Yeah, exactly. Okay. I mean, it's take, for example, the consumer confidence that actually beat expectations for the first time in a million years this week. And people were immediately skeptical. You report your fourth quarter, it's people are just going to be dubious. A name like Kava that's up something like 20% today, that's just people being short. You don't want to chase moves like that. And, if you get a nice pullback in some of these companies like TJX down 1%, that's just fine. Put it straight in my veins. I would love it down 10%. Victoria's Secrets, when they report, you get that company down 15%, that's, just an overreaction. It's just trading noise. But it's an opportunity if you're quick, and that's what kind of my job is.
And you still have a shopping list, right? You still have a list of things you want to buy?
Oh, heck yes. Give me Victoria's Secrets lower. Give me TJX lower. This is a great time to be building positions, but it's, again, it's not last spring levels of good time. It's not, let's get out there. They're not pricing in the apocalypse just yet. What they're pricing in is just kind of an uncertain environment with a consumer that's frozen. It's lows. That was up 15% going into the number. There was nothing they were going to say that would have driven that stock particularly higher than where it was going into this call.
I think the technical term for a period of sideways chop would be an accumulation pattern. So you might as well use that time to accumulate a position in a company that you like. I know you've been doing that. I know you put on a long-term options trade today on one of the stocks that we just talked about that you sent out to your members. If you want to get that trade as well as every other trade Jeff makes, whether it's an options trade, a short-term options trade, a long-term options trade, or just the entire Macke portfolio, which is, what is it, 10 stocks that you own and that you're
magical stock, 10 beauties, everyone prettier than the last, Spencer.
And these are your most bullish long-term plays. The link is in the description here. I'll put it in the chat right now as well for everyone that's watching on YouTube and on the Twitter there. So you can see that. But that'll get you into the Macke portfolio. You can see what he owns, and you can also get his options trades basically every single week. He's putting out new trades. Short-term, long-term, every term in between. And
I like to mix it up. I like to keep it. We're taking the pitches. We're hitting the pitches as they come over the plate. You don't go for the yard every time. Sometimes you just take a single and walk to first base.
It's funny because we started the year off. The first few weeks of the year were incredible, right? It's every consumer stock was just ripping, and now we're sort of consolidating. We're just kind of taking a breather, and that's okay.
You sell the news. That's exactly what happens. Discretionary has been just poleaxed this year. People are rushing into staples. As you recall, raise a little cash into that January buying kind of binge that we had. That's a great time to start selling. And right now, put it straight into my veins. I like the uncertainty. I like this chance to go out shopping. But there's no rush. We've got 3 more weeks of earnings season. There'll be opportunities, and that's, again, what I'm here for.
Uncertainty creates opportunity, and that's why we have you to tell us where the opportunity is. So that's the deal. Get into the Macke portfolio, get his trades injected straight into your veins. When you sign up today, he will inject it into your veins. And we will see you next week. We'll talk more earnings. We'll talk Victoria's Secret. We'll talk I don't even know who else reports. I'm sure
we got Target, we got OnCloud, we got the Swiss juggernaut shoe company coming in. We've got Yeti. It's an exciting. It's going to be action packed.
So many shoe stocks. So many shoe stocks.
And popping Crocs, Deck. They had great quarters. Nike not going to have a great quarter on. And the jury's out. We'll see when the Swiss juggernaut reports next Tuesday.
All right, we'll see you next week. Use the link in the description and in the chat. We will see you in the portfolio. And Jeff, keep on keeping on.
All right, my man. Have a good day.